GM, so is the bull market over? You guys know, I give you the real deal, not the crap. I tell you how it is. And yes, the bull market has been over, like I've been saying for a number of weeks now. We've been in this Wyckoff distribution, which I first shared 3 weeks ago now in this YouTube video here, saying that Bitcoin was most likely to be in distribution purely because of the sweeps at the highs, the good news being used as exit liquidity, the high volatility, all of these things that I highlighted, simply now playing out. So guys, if you're not subscribed to the channel, please help me hit 500. Everyone out here on YouTube, they were calling alt season, bull market, keep DCAing, while it seems like me and maybe a number of other quiet voices out there are giving you guys what really is happening, and that was a clear distribution, smart money dumping on retail traders' heads, and it's now playing out here. Sure, could we have V-reversed and went to new highs and I would have looked like a fool? Yeah, but that's why I've always planned for all scenarios for you guys, told you guys exactly what I'm doing with my money, which you guys know, 100% cash, took profit on my cycle bags August the 11th at 121k. We've been prepared for this. We're not scared of going into a bearish phase or bear market. In fact, the terms bull market and bear market are pointless anyway, because people only called 2022 a bear market once we were over here. Everything's a bear market in hindsight, but does that help you? And just like people only called this a bull market when it was over here. Yeah, great, bull market in hindsight, but was you calling it a bull market when it was back here? That's why using these terms is absolutely pointless, and is exactly why you need to build your own systems, build your own strategies to win in the markets. That's the only way. And you know, I teach you how to do that in my school. So get yourself in if you're not already, because Bitcoin 50-week EMA, the cycle support, is not being respected. And I said for a number of reasons this was not likely to be respected, mainly because in previous examples, the 50-week EMA retest coincided with a high time frame SR retest. Once over here, twice over here, but this time we were below the high time frame SR when we were testing this 50-week EMA, which was a big difference. Plus, we've just come off of this, of course, large Wyckoff distribution, which is playing out here. So what I'm now looking at on Bitcoin is this macro range. So yearly open looks like the target here for Bitcoin. It's very interesting because if you guys will remember on a previous monthly outlook video, I talked about how the summer low has never been hit in a bull market year. And we can mark all of these out. This was the summer low of 2024. This was the summer low of 2023. 2022 was a bear market year, so we don't look at that. And 2021, summer low was officially here, didn't get hit until 2022. You guys get the point, and it's the same for 2020. Whereas this time in 2025, which should be the equivalent of 2021 if the 4-year cycle is going to continue, we've taken the summer low. So there's a clear change of character here, guys, this cycle. And potentially that's your earliest sign of the 4-year cycle actually breaking. And I've dived into that heavily in my monthly outlook video. I'll pin it in the comments. It's called Is Bitcoin Going into a Super Cycle? Goes into some of my high time frame ideas, but the signal has now been hit. We've hit the summer low before what should have been the bear market year in 2026. There's a big change of character here this cycle, and I expect Bitcoin to now move very differently in the coming years, and maybe the 4-year cycle doesn't play out, which is pretty logical, right? I mean, the halving gets less and less relevant every 4 years. I know obviously the presidential election coincides with those 4 years, so it's not just about that, but it would give it less relevance since the halving literally has less relevance every single 4 years because it has less of an impact. So cycles, pointless getting yourself in a bias, but something objective like the summer low being hit in 2025, that is not subjective. And that shows you that there is some signs of it actually breaking. So what can we expect here? That's why I've drawn out this big range in this discount zone between 74 to 87.4. That's where I'd be looking for high risk reward longs again. This could be a swing trade, and let's say we get a big capitulation into this area. I'll be looking to trade it back up to the yearly open, if not maybe this 50-week EMA. And from there, who knows what's going to happen? That's many, many weeks away. But having lost this 50-week EMA and it's now starting to downslope, this is when you can see it actually be a target on mean reversion rallies the lower we go. So it's different from over here. We're not coming into it and finding support. It's different from over here. That's why I'm looking for a different setup. For swing longs, I'd be very interested in this high risk reward area. And it's right around that previous reaccumulation from all of the tariff dramas. It's the last place where smart money actually reaccumulated and it led to a markup to new all-time highs. So it's an area of demand, right? That's why it's a very interesting area for me when it comes to swing longs, and somewhere I'd be looking for some sort of bounce, because all of the shorts, the sells in here, likely to get exhausted in that zone. That's where they should be taking profits on this breakdown. So watching this area, that probably won't come today, but maybe in the coming weeks. Now, on the lower time frames, you have, of course, got the yearly open, which is going to be an interesting level. Would expect this to provide some sort of bounce, at least initially, even if it's just a mean reversion bounce back to this H4 order block over here. And I'll be watching this H4 order block quite carefully to see, does it hold on any retest that could potentially set up for some shorts on the back test. Of course, that coincides with the 50-week EMA, so can see a nice setup here trade-wise, where you're looking at this 50-week EMA now being resistance. This 50-week EMA will keep falling, so it can fall into this H4OB, which gives you two confluences where you see a wick up into their rejection. You can then look for a short, stop loss managed, targeting wherever price action says. Of course, we won't know. This maybe not even going to play out, so that'll be one to watch if it does happen. That would be something I'm looking at as a back test of this general resistance zone. Shorts get squeezed up, and that can offer high risk to reward setups. And then, of course, on the long side, yes, there may be some scalps around the yearly open where we can look for something low time frame. That's going to be very price action dependent. Can't really plan it out because it depends how price goes into the level. Is there big liquidations? How does it reclaim? So many factors to look into, but definitely an interesting level to scalp around on the long side yearly open. And losing that, that's of course when the swing longs then set up in this higher risk to reward area, which is more so on the daily time frame to set up some swing positions. That's what I'd be looking at. So as always, guys, you want to operate in the high risk to reward areas. You guys know I've been saying this for some time now. You don't want to operate in these low risk to reward areas, especially in a market like right now where it's a mean reversion traders setup, it's a scalpers setup, it's a day traders setup, and it's high time frame patience required. Exactly what I said on yesterday's video, and mentioned that coming into this summer low over here could lead to a nice bounce, and we got it. We bounced up, but that was met with selling at this 50 EMA on the 15-minute. And we're now breaking through. I wanted to originally look for a setup over here, coming back into the 1550 EMA, which also coincided with the 1 hour, 12 and 21 EMAs, hoping for a quick squeeze up into this area, but looks like we are just going to front run that and break down. So more likely going to actually have to trade this H4 OB setup instead, which is similar, but just on a higher time frame, because these H1 bands are going to continue falling. So yeah, sellers are very aggressive right now, and it looks like they want to move to that yearly open here. So downtrend is playing out, guys, and it's exactly what I said in all of this order flow analysis over here. This was the daily open of Thursday. We lost it. That set up continuation lower. In the Discord, mentioned exactly this. To the downside, you have the daily open at 101.6k as the support level for bears to flip for continuation lower, and that's exactly what happened over here. Bears flipped that daily open. and it literally went down only since then. Played out absolutely beautifully. You see this big ramp up of open interest. Shorts are shorting very heavily. You don't actually often see this where you've had heavy perp shorting, been talking about it all week since here, and they're all right. They're not getting squeezed. Perp CVD's down, spot CVD's down, open interest is up, so shorts are opening and price is going lower. So that means there's overwhelming sell pressure. This is something you really see in the bearish phases, bear markets, because it's very indicative of liquidity in the market being pulled. And that's what happens in a bear market. Liquidity slowly gets drained and drained and drained. There's less of a passive bid supporting the price. So then you see just a painful grind lower where sellers are constantly right. Eventually that sets up for a big squeeze risk. So you've always got to have one eye on a short squeeze if you are short. You can't just short. It's not the same as being long. It's fundamentally very different. Every short has a liquidation price. You can't get liquidated if you're spot long. So fundamentally, just for that simple reason, it's very different shorting. And also, it's because liquidity is actually falling that, yes, it's good for bears, but also that gives them high risk of a squeeze at some point, which will inevitably happen when you've got such a build up. But very interesting. Right now, they're just constantly right. No matter how many shorts add here, they're just right. Price keeps going lower. Perp CVD continuing to fall. So look at that. Very aggressive. And price is going down. That's the big difference. It's harmony. You haven't seen this in a very long time where price is just constantly agreeing with all of these shorts. They're not getting squeezed right now. And this is indicative of some heavy selling, guys. Some big player selling. Someone trying to offload their large Bitcoin position. Probably as a result of losing 100K as a result of this Wyckoff distribution. They're desperately trying to get out. So, again, watching the reaction at that yearly open, can that set up for a squeeze? If so, I'd be looking for then shorts on some sort of rejection, as mentioned earlier. Or do we just crash through it? Nothing's guaranteed. You've got to obviously trade your own systems, guys. That's what I always teach inside the school. Build your own systems. You're not trading for today's market. You're trading for the future market. When you do have the skills of a professional trader, when you do have your own profitable systems, the markets aren't running away from you. So if you don't have one, join the school. Come and build one with me. But that's what I'd be looking at as your higher risk reward areas for scalps. Around that yearly open long. But looking for that rejection short as the better play of a longer term hold, maybe multi-day, multi-week. So that's what I'm looking at when it comes to Bitcoin. You're seeing sellers very much in control here. You're breaking through all the levels. You're coming to the yearly open. So looking for a short around this H4OB. I think that 50-week EMA can provide a nice inval for your stop. Would be targeting a break of the yearly open if we do get that. Otherwise, if that doesn't come, then looking for these high risk reward longs around this discount zone. I think that can set up some lovely rallies wherever that comes. And you just got to wait for the capitulation wherever that's going to be to, whether it's lower, you're not sure. Price action dependent, guys. So that's what I'm looking at on Bitcoin. Now, of course, I've been 100% cash, so eyes now looking towards potential buying, guys. Setting up those beautiful plays. I mean, we bought around the 60s, sold around the hundreds, bought back literally at this 50-week EMA, sold at 121. It's been absolutely beautiful in the high time frame trades. And I think a lot of people have the misconception that you've got to be a scalper, you've got to be a day trader to print loads of money. It's definitely not true. While scalping and day trading can be very profitable, it's these big high time frame swings that really compound your portfolio and give you those, I'm not going to say a number, but potentially super high gains. At least I've experienced that this cycle, done multiples on my portfolio, and I contribute most of it to the high time frame buys. Spot bags do most of the work. So very interested in where can we look for reallocations. More on that in the monthly outlook video that I pinned below, but we're coming into some of these high risk to reward areas, especially in the 80s, where I'm definitely going to be doing some buying, definitely going to be allocating, because this is the equivalent of being short when you're in cash in today's world where dollars are pretty much worthless. You're only doing it to protect yourself from asset downside. And that means you need to get back into assets quick, because those who hold assets win long term. I'm very aware of that. And that's why I'm really eager to get allocated, get back in. And, right now, essentially short from the top, 21% down right now. And when you're looking at something like 27, 28, 29, 30, this is when you've got to start thinking about allocating, because from there, from this zone, it's a 37% move just back up to where I exited, which is pretty insane. 42 to the highs. So looking for some areas to start doing some bidding on my high time frame bad. So of course, in the Discord, I'll update all of you with each move I make, the exact percentage I allocate on any high time frame spot buys. But yeah, 100-week EMA looking pretty interesting. This overall zone over here of previous reaccumulation looking pretty interesting, and should be where price ends up going to if that yearly open can't hold, and that sets up potentially for some bigger range over here. So that's what I'm looking at in terms of Bitcoin. Now, shall we look at the rest of the market? Why not? So stocks, what are they doing? Well, let's see if we can get all of these charts. There's actually something pretty interesting that I noticed the other day. So we've actually seen Bitcoin, dollar, all down recently. And I got a really good question from someone about how come everything is down? Why is the dollar down? Why is Bitcoin down? Why is gold down all at the same time? Should that not really happen? And yes, typically they don't all go down at the same time, but you'll actually notice on these big liquidation days, like October the 10th, all assets actually end up going down. So if you see, you've got the stock market at the bottom, you've got Bitcoin at the top, and you've got the dollar, the DXY in the middle. So October the 10th, all assets dumped at the same time. And you'd think dollar down should mean Bitcoin up, right? But when you have these big bearish phases where it's just all out exiting and people potentially exiting their capital in America, this is when you see Bitcoin down, dollar down, stocks down. And you're seeing it again. Happens in those extremely bearish periods where people are just pulling liquidity completely out of the system, out of America, and typically leads to, obviously, your biggest down moves, your bearish phases. And seeing that happen again right now, and can only think that that is potentially money being pulled out of America and obviously out of the stock market. Is the AI trade potentially coming to not an end, because I think AI is going to stay around for decades, but a cool down, a much needed cool down? Very much potentially. So you've got the 50-day EMA, which has held on the stock market previously this year. Could we have the first close below it? That would be potentially a sign that we're going to see some extended downside on stocks. So very interested to see if we do close today below that 50-day EMA. Could be the trigger for some extended downside, or if not just distribution, where you're looking at what I said yesterday. Bitcoin and crypto have front run the selling. They top out before the stock market, and now you're going to see the stock market follow through. Very common. So eyes would be wide open seeing, does Bitcoin actually outperform stocks on the downside? Because we know last time that was our clearest signal of the bottom being in. Let me show you again. So if you missed last video, what are you doing, guys? But anyways, I will take you through it. Remember, during all of the tariff craze over here, where you saw Bitcoin actually break down from its range. So Bitcoin had a range over here. Bitcoin actually broke down from its range on this day, so February 25, where stocks were still within their range. So stocks had a range, low was over here. Bitcoin broke down, stocks were still at the highs, and then stocks eventually broke down on March the 4th, where Bitcoin had already done most of its down move. It already almost bottomed. You can literally see that here. Whereas stocks, look how much more they had to go. So Bitcoin had literally pretty much bottomed out over here with a 3-push reversal, whereas stocks were doing an entire new leg lower. And that's because Bitcoin tends to top out before the stock market. And that's exactly what we've seen happen again, right? You've seen Bitcoin is topped out, broken below the range, whereas stocks, they still really haven't broken below their range. So Now you're watching carefully. You're watching to see when stocks do actually start breaking down below their range, if they do, obviously not guaranteed, is that when you actually see Bitcoin with some relative strength and Bitcoin going more sideways while stocks actually keep doing legs lower and actually then start basing out. That's when you're going to see that relative outperformance in crypto again. And it's when you want to be allocated to crypto because everyone's becoming a stock trader right now. Have you noticed recently? They're avoiding crypto, they're getting out of crypto, saying crypto's trash, becoming a gold trader even. And that typically happens when you're close to crypto actually being the asset that outperforms. Everyone takes their eye off the ball at the worst time, of course. That's what happens in markets when something becomes consensus. Obviously, the consensus are always wrong because if the consensus are positioned for something, then the opposite is always going to happen because that's the undercrowded trade. So you've got to have your eyes open. You've got to be active in the markets during the worst periods. And those are the people who make all the gains, guys. The people who are around during the bear market, the underperformance. They're the ones who get the outperformance, and they're the ones who deserve the outperformance when crypto is ready to start outperforming again and the stocks go sideways or even down. Those who had the conviction are the ones who deserve the gains, and they get the gains. So stick around, build your systems, don't check out of the markets now when literally potentially the biggest opportunities are actually coming, when your easy trades are actually going to eventually arrive, when you see on the daily something like the bands turning green as your earliest signal for potential swing trades, and we're getting into high risk reward areas. Don't check out now. Now's the time to actually check back in, get yourself active in the markets, because you're seeing all of these assets, they're going lower, but lower should equal opportunity for you. And when you look at something like ETH, much like Bitcoin, broke below Monday's range. Monday's range sets up the classic expansion move. Spoke about this literally on Monday. Led to its down move, and right now it's consolidating on ETH. This looks like it wants to go much lower. And I told you guys, below the yearly open, you're likely to start filling in this gap over here. This is the target for ETH. I think it's going to go into the 2000s pretty easily. Now that you've lost the yearly open, and the question is, where is support on ETH? It's very hard to say this is a good buy zone on ETH as an investor, as a high time frame trader. And that's why I focus on Bitcoin, guys. That's why this is what I'm looking at. Bitcoin always leads. If Bitcoin's going to be bullish, then only then can ETH be bullish. Bitcoin's not going to be in a bear market and ETH be in a bull market. So just a quick rundown on ETH, what I'm looking at. I think it's going to go into that gap. Quick rundown on Sol. For you altcoin lovers, I got your back, don't worry. Sol lost its yearly open as well, which is somewhere around 289, I believe, if memory serves me correct. It is somewhere, you guys can just believe me, it's somewhere around this, 189 level. Sol's lost that. This led to filling in some of this area. So it's like, do you want to bid this area? Maybe. I mean, it's held. Me personally would rather stick to Bitcoin, the asset that's made new all-time high after new all-time high after new all-time high, and just trade these assets. This is a trade, guys. This is where you set an entry, stop loss, and take profit, and let your systems play out. It's not an asset that you're looking for high time frame buyers on like Bitcoin, because only Bitcoin makes new highs cycle over cycle. It's the truth. I'm not going to give you guys the crap that most people do on YouTube. I'm not going to tell you altcoins are going to change your life. Everything's a trade when it comes to altcoins. Bitcoin is the only asset you can DCA into because it's the only one that makes new all-time highs cycle over cycle. That's why people say no matter what price you buy Bitcoin at, you're always going to be in profit at some point, because that literally has been true. You buy highs of last cycle, you end up doing a 2x. You can't say that about any altcoin. So that's the crypto market. Guys, if you've enjoyed, please help me out. Drop a like, drop a comment. I read all the comments. Drop me a Telegram if you want. I'll help you out if you got any questions, want mentorship, and most importantly, turn that bell on, drop a subscribe, help me get to 500. Otherwise, I quit YouTube. Joking, but I should be at 500. Come on, guys. This is rude. GM, guys. Hope you have a good one.